Welcome back to Algobot, where we break down automated trading strategies for MetaTrader 5 in plain, everyday English. I'm your host from Algobot, and today we're exploring an expert advisor called Steady Baseline Trend Pullback. This strategy builds a denoised trend line, a steady baseline, that quietly ignores violent, low-information bars and follows only the market's calm consensus. It then looks to join an established trend on shallow pullbacks. By the end of this video, you'll understand the indicator behind it, the exact entry and exit logic, and how it manages risk. Remember, this is educational content only and never financial advice. Let's dive in. So what exactly does Steady Baseline Trend Pullback do? At its heart is a single, thoughtfully designed indicator. Most moving averages get jerked around by a handful of violent bars, things like news reactions, stop cascades, and sudden gaps. Those wide bars are actually the least informative about where value truly sits. This strategy turns that idea on its head. It builds its trend line as an inverse volatility weighted mean of the typical price. In plain terms, every completed bar contributes to the line, but calm, tightly ranged bars, where the market genuinely agreed on price, carry the most weight, while wide, chaotic bars are almost ignored. The result is what we call a steady baseline, a smooth, denoised anchor of accepted value that doesn't lurch around on outliers. The strategy uses that steady baseline purely as a with-trend pullback engine. It never tries to fade or fight the trend. Instead, it waits for an established drift, then looks to join it on a shallow, orderly pullback back toward the line. This is one of the calmer archetypes in trend following, and the whole design is oriented toward keeping losing trades small. It's built with trending major currency pairs and metals in mind. Think euro to US dollar to Japanese yen, or gold, on time frames from 15 minutes up to 4 hours. But because it only reads the chart it's attached to, it will run on whatever symbol and time frame you select. This is a tool aimed at traders who prefer patient, rules-based continuation setups rather than rapid, high-frequency scalping. Everything here is for education and study. We're unpacking how the logic works, not making any promise about outcomes. Trading always involves risk, and losses are a normal and expected part of any strategy. Let's walk through the logic step by step. On every completed bar, the strategy first builds its steady baseline. It looks back over baseline bars, 30 bars by default, and takes a weighted average of each bar's typical price. The weight for each bar is simply 1 divided by its true range. So a calm, narrow bar gets a large weight and pulls the line toward it, while a wide, spiky bar gets a tiny weight and barely moves it. That's how the line stays steady and denoised. Next come 3 gates that every setup must pass. The first is the trend gate. The strategy measures the baseline slope over the last slope bars, 10 bars, and divides it by the current ATR, so the measurement is scale-free. That slope must be at least MinSlopeAtr, which is 0.20, and price must sit on the trending side of the line. For a long, the baseline must be rising and price must be above it. For a short, the baseline must be falling and price below it. The strategy never fights the drift. The second gate is the shallow dip. Within the last pullback bars, 5 by default, price must actually pull back and tag the baseline. But the dip may not sink deeper than PullbackMaxAtr times ATR beyond the line, 1 full ATR by default. The idea is simple. A shallow dip means the trend is strong, while a deep dip suggests the trend may be breaking, so the strategy simply skips it. The third gate is the reclaim. The strategy waits for a bar to close back on the trend side of the baseline with a decisive body, at least body frac, 40% of the bar's full range. It also checks a no-chase filter, so the close cannot be more than MaxAtr times ATR beyond the line. This is acceptance of value, not a fleeting intrabar wick. When all 3 gates align, the entry is placed. For a long, the stop sits just below the pullback low with a small buffer, and the target is set at risk-reward, 1.8 times that risk. A short mirrors this exactly. Once a trade is open, the stop is pulled to break-even after break-even hour of profit. An optional ATR trail can lock gains, and a fast invalidation closes the trade the moment a bar closes back through the baseline. So a failed continuation costs only a fraction of the full stop. Let's read through the code the way it looks in MetaEditor. At the top are the input parameters you can adjust. BaselineBars sets how many bars build the steady line. SlopeBars measures its slope, and MinSlopeAtr is the minimum slope in ATR units. Pullback, and PullbackMaxAtr define how recent and how shallow the dip must be. MaxChaseAtr is the no-chase limit. BodyFrac is the minimum candle body, and risk-reward sets the target as a multiple of risk. Now look at the long block. The strategy combines 5 conditions with logical ands. Uptrend confirms the baseline slope is at least MinSlopeAtr and the close is above the line. Tag DN checks that the pullback low actually reached the baseline. Shallow DN checks the dip wasn't too deep. Reclaim up requires a decisive bullish close back above the line, and no chase up confirms price isn't already extended. When all 5 are true, it calls trade up buy. The stop is placed just below the dip low with a buffer, and the take profit is the entry plus risk reward times the distance to that stop. The short block is the exact mirror. Downtrend needs a falling baseline with the close below it. Tagged up and shallow up check a shallow rally into the line, and reclaimed in needs a decisive bearish close back below. When they align, it calls trade.sell, with the stop just above the rally high and the target risk reward times the risk below the entry. Same structure, opposite direction. Let's bring the logic to life on the chart. The blue line running through the candles is the steady baseline, our inverse volatility weighted anchor of accepted value. Watch how smoothly it moves. Even when a wide bar appears, the line barely reacts, because that spiky bar receives almost no weight. Follow the sequence with me candle by candle. At the far left, price is drifting higher and the steady baseline is sloping upward beneath it. This is the trend gate coming to life. The slope is comfortably above the minimum of 0.20 in ATR units, and price is sitting on the upper, trending side of the line. So the strategy is now only interested in buying pullbacks, never selling. On the second and third candles, price eases back and dips down to tag the baseline. Notice how shallow that dip is. It just kisses the line, and its low barely slips beneath it, well within 1 ATR. That shallowness is exactly what the strategy wants to see, because a gentle pullback signals the uptrend is still healthy. A deep plunge would have failed the shallow dip gate and been skipped. Then comes the fourth candle, and this is the reclaim. A decisive bullish candle closes firmly back above the steady baseline, with a solid body that fills at least 40% of its range. Price also isn't overextended above the line, so the no-chase filter is satisfied. All 3 gates now agree, and the buy entry marker appears. The protective stop is tucked just below that shallow pullback low, which keeps the risk structurally tight, and the take profit target is set a distance of 1.8 times that risk above the entry. Over the next few candles, price pushes steadily higher, riding the trend. As it moves in favor, the stop is lifted to break even once the trade is 1 unit of risk ahead. Price continues to climb until it reaches the take profit target, and the long trade closes for a completed reward to risk result. That's the with trend pullback in action. Now watch the character of the chart change. Around the 8th and 9th candles, price rolls over and begins falling, and the steady baseline gradually bends and starts sloping downward. Once the slope is negative by at least our threshold and price is trading below the line, the trend gate has flipped. The strategy now only wants to sell rallies. On the 12th candle, price bounces gently upward, and its high just tags the falling baseline from below. Again, notice how shallow this rally is, well within the allowed distance. It reaches the line without pushing far beyond it. Then the 13th candle delivers the mirror image reclaim. A decisive bearish candle closes firmly back below the steady baseline with a strong body, and price isn't overextended below the line. The sell entry marker appears. The stop is placed just above the rally high, and the take profit target sits 1.8 times that risk below the entry. From there, price slides lower across the final candles. The stop trails to break even as the move develops, and price runs down into the take profit target, closing the short. 2 trades, both taken with the trend, both entered on a shallow reclaim of that steady, denoised baseline, and both risking only the shallow distance to the pullback extreme. That combination of a calm anchor line, 3 confirming gates, and a tight structural stop is the entire philosophy of this strategy. and that's the steady baseline trend pullback expert advisor. Today we saw how it builds a denoised, inverse volatility weighted baseline that ignores violent bars and tracks the market's calm consensus. We walked through the three gates, the trend slope, the shallow dip, and the decisive reclaim, and we looked at how it sets its stop just past the pullback, targets a fixed reward to risk multiple, moves to break even, and invalidates quickly when price closes back through the line. As always, this video is for educational purposes only and is not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses do happen. If you found this helpful, please like the video, leave a comment with strategies you'd like us to cover next, and subscribe. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.